And there it is. The markets are officially closed on this Wednesday, February 25th. Welcome, investors and traders. We have an action-packed half hour for you. Everything from the charts to strategy to the closure of the CME with regard to trading the futures. We got a lot to talk about, so stay tuned. First and foremost, if you're watching us from X, try going over to the YouTube channel that we have, StickyTrades channel. You'll have a better experience over there because we're going to be pulling a lot of ticker symbols and questions from that platform. And then, of course, you could always subscribe to the channel, hit that notification bell right at the top, and you won't miss a beat. So before we get into the charts, let me bring on Nod from our Nod live news feed. He's got a lot for you. So Nod, why don't you take it away and give us some of what you're pulling out of the news feed. Go ahead.
Man, you're right. This half hour is going to fly. Thank you all so much for being here. AJ, Anthony, and I really appreciate you taking time out. Lots going on. We all know that we have NVDA coming up in about 20 minutes. But before that, U.S. equities did rise today, continuing their momentum from yesterday, and really in a relief from last night's State of the Union where there were no really big surprises. The NVIDIA, everyone's predicting a 6.1% move in the options. What's really interesting, and we'll talk about this more, AJ, is with 10 crosses of the 50-day moving average in the last 50 days, the S&P really is in no man's land, and I'd say it's undecided. And Bank of America made some really interesting comments and predictions around gold and silver, which we'll get to next. But what I wanted to do here first is I want to pull up this first chart. Some big psychological news and levels came up with lending and mortgages. The housing market has been a big focus, and while I know it's not the prettiest of topics, with rates now down to 6 or below, that kind of triggered a lot of people. So I've got something up here, AJ, which shows where rates have been over the last several years. I wanted to ask you to please cover the housing ETF, which is XHB, which is a home builder ETF, a Toll Brothers, which builds home, and Rocket Mortgage, RKT, which lends to people, so we can encapsulate that very important part of the economy.
Right. Now, you talked about the moving average. Now, on this particular chart, I'm using the 20-period moving average.
Right.
And if you're brand new to charts, understand I use the 20-period moving average because, for the most part, there's 20 trading days in a given month. So that gives me an idea of where the fair value for the stock is over that period of time in the trading month. And as of today, you could see this ETF, this is the Home Builders ETF. It not only closed below that 20-period moving average, but if you look down below, we had a massive spike in volume on the way down. And what that tells me is that as we're breaking out now below this key role reversal support, see, we closed not only below the moving average, but we closed below that support. There are stop loss orders that are now being triggered off because when traders get in, they generally put stops somewhere below the support level. So I do believe we're going to see a continued move to the downside on XHB. Not, if you want, I'll put a little forecast on there if you like. I don't think it's going to collapse, but I think we could come and at least test the trend line from here. See, we're actually in a fairly well-defined trading channel. And so the target that I put down there, I'll make that 112 even, get rid of the $0.50 there. And
it'll love to stick your neck out there.
Yeah. So I'll go to 112, but I think that you could even see a possible breakout below that trend line. And the reason I say that is because if you take a step back and look at the weekly, this whole pattern is more or less a massive channel here. And we're at the top of the channel on the weekly, which is going to be acting as resistance. So now you're looking at the weekly chart and you see the target that I put on the daily. There's my little daily chart. So you can see it's not really a big stretch to put a downside target on that one. However, for the option traders, that could be a nice little trade with a move just $2 or $2.50 lower from where we are, because the option markets are a great way to leverage your dollars without spending a whole lot of money, putting up margin requirements and things like that. So if just giving you an idea, I'm just not a trade recommendation, I'm giving you an idea of what I'm talking about. If you think it could drop to 112, I would most likely look at the 112 puts. Now, the markets aren't open, so you're going to have a wide bid-ask spread. And you could buy those for probably around $4, maybe a little bit less than that. and take a ride on that one and maybe pop it out at $5, make a quick 25%. Again, that's how we trade options. Not a recommendation. I have no idea what your level of experience is for option trading, but I'd be more on the downside than on the upside. Now, if you look at Rocket Mortgage, they also are named Rocket Companies. You can see this a little bit different, where we have a full-fledged pivot point today with a higher low, higher high, and the volume is increasing on the way up. Even though it's a red candle, we had a higher low, higher high on increase in volume, and that's caused the oscillators down here to start to pivot up. There'll be a buy signal on the CCI, which is right down at the bottom. See that blue line? As soon as that crosses over the green line, which is the minus 100 mark, that's when traders will read that as a buy signal. So it has to get up over that green line for the buyers to come in. And if you're a good trader, you'll know that you should be waiting for the signals and not anticipating the signals. That's very important, that you don't try to catch a falling knife on the way down, that you actually wait for the pivot and wait for the signals to confirm the pivot. So on this one, I'll go out and put a target on this one. It doesn't look like much, but percentage-wise, you could do really good things on the option table there as well. I think you could get that stock a little bit higher, maybe $1 higher, up to around 1837. And then what's going to happen is you're going to see that 20-period moving average acting as resistance at that point. Now, again, if you're new to our channel or new to StickyTrades, understand we do this every Wednesday from 6 to 7, where here I'm going over a few stocks, but during that webinar, we'll go over 50 stocks at the minimum, 50 stocks in that hour. And I put my targets on all of those. And we have a very high percentage of hit rate for those targets that I set. So if you're a swing trader, especially, or an option trader swinging the market that way, then I would say plug into that. We have a free trial, no credit card or anything like that needed. You don't even have to cancel. It just expires. And I do believe there's a scan code showing up right below here, if I'm correct. I don't know if that's the scan code for the free trial or for the Nod Live, but there'll be a scan code right there. And then you could plug in and listen to our webinars and ask us questions. So there's the Rocket. Now, the other one was the home builder there that you were talking about. Was that
Toll Brothers, TOL, please.
TOL. Sorry, I was thinking of LEN, because they're also. Now, we looked at this one before, and interestingly enough, I drew some Fibonacci lines on here. And what is a Fibonacci sequence? Well, it's a mathematical calculation that gives us pullback points. And I started that Fibonacci line down here on this low, and I drew it up to the high recently. And what do we have? We have a pullback right to the 154.26 level here, which was the 23.6% retracement level for the Fibonacci. So that works really, really well. Now, the difference between what we're seeing here and the home builders ETF is that this little candle here, right at that roll reversal. See, here's the roll reversal. Give you another quick lesson. There's resistance that was broken here on this green candle, is now acting as support. So I would expect maybe a little bit lower, but a bounce off of that support level, because the support level is coming in right at that moving average as well. Now, I'm not going to be a huge buyer. I would rather wait for a pivot, actually, but that's another one I would look to maybe buy some calls, maybe out to April, May, maybe even June or July, depending on how much time you want in the market. So here's another one. I'm just going to do a two-parter. I do that quite often. I'll say a test of that moving average and then right back to these highs here. So I'm going to go 155.96, rounding that up to 156, get rid of the 4 pennies there. And then I think we could see a bounce after a drop in volume here up or right back up to one. I'll put 163. So you can see that this one has a lot more of a range for option traders. And if you want to learn how to collect money from the market, then come over to our Sticky Trade University and learn about credit put spreads or even cash secured puts in a stock that you're willing to buy. That's a very important part, that you would sell puts or put spreads in stocks that you would want to buy. And whether you get the stock or not, you get paid immediately upon selling those spreads or selling those puts. So we do a lot of that here in helping our traders learn how to make money by spread trading, because quite frankly, it's the most conservative way to go, in my opinion, for the option traders, rather than speculating on cheap options, hoping you're going to hit a home run and take your $5,000 account and turn it into $1 million in 3.5 weeks. It's not going to happen. That's not reality. But we are doing extremely well. Ask any of our members in the chat here, and they'll tell you exactly what's going on here at StickyTrades. So there you go. Two-part forecast for you with the upside at 163. What else you got for me, Nod?
You covered a lot. I thank you. So
yeah.
I want to talk about short interest. I mean, so relatively speaking, when you take a short position, you're betting against the upside. So I've got a graphic here. People are betting against at a record level, AJ. So relative to history, the short interest is elevated across all sectors in staples, healthcare, utilities, and energy. So AJ, when you like to bet against something, a two-parter for you. Do you prefer to short a stock outright, or do you prefer to use options? And then when you do, I'd like you to look at these three big names, which are the most shorted, which is Procter & Gamble, Walmart, and Coke, please.
All right. Well, first and foremost, you said bet against. I don't bet against. I don't bet against any company. I basically trade the swings or the legs of a stock. Okay.
Sure.
Now let's talk a little bit about that, because first and foremost, there's a lot going on here with Procter & Gamble. Number one, it's right at a key resistance level up here. So I'm going to draw that for you right there. So we're right up against that resistance, and we're pivoting lower. So here we had an update in the market, not a big update because it was mixed with the transports and the industrials, more or less opposite from one another today. But this one's pivoting lower, and I would expect to see an increase in volume tomorrow as it goes lower. Now, I don't like shorting stocks. In fact, I've never shorted an outright equity in my life, ever. I've shorted the futures markets. That's more suicidal.
Why is that?
Well, because there's no need to. As an option trader, put it this way. If I shorted Procter & Gamble, let's say I shorted it for $160, I have to put up $80 in just in the Reg T margin requirement. I have to put up $80 to make what? If I buy the short back $2 lower, I'm making $2 on my $80 margin requirement, which is the investment, rather than taking that money and going into the option markets and buying an inexpensive, look at this. I could buy, for me now, if I were looking to short this stock, I would buy the July 150 puts for around 3.5. So check that out. I don't have to put up $80. I have to put up $3.5, which is $350 for every option. So that's a no-brainer for me. As one of our VIPs, Gino, often talks about the no-brainers, right? Why put up $80 and risk $80 when you could put up $3.5 and only risk $3.5? So that to me is the way to go. So if I bought that put, I would be getting out on the bounce, or at least a touch of that moving average, because if I project where the moving average would be, there you go. You're talking a $3 move lower, and with a $350 option, I could do very well on a little bit of a move like that. So I don't have to wait for the stock to drop big to make money. I just need a slight pullback. So I'm not really betting against the stock. I'm basically reading a pullback point. And so that's why it gets so exciting for traders that know what they're doing. And, there's a lot of folks that are listening to us. I don't even know how many thousands we have. Look at that. We're ripping the numbers right now. But we've got a small stadium of people watching us right now. And I hope you're all as excited about this market as we are, because you don't have to bet the farm and risk everything to make money in this market. Take a little bit of money, learn how to manage the risk on that money, and come in and out of the market. Now, you could also be a buy and hold investor, but right now the markets are looking overextended. I really don't know what's going to happen, especially with what we saw today in the CME, which we'll get to in a moment towards the end. But that's Procter & Gamble. Then we got Walmart, you said. And then looking at that, there you go. You got another pullback on Walmart. Now look at this diagonal line. Folks, 2 weeks ago, I put a downside target on Walmart right there. Why did I drop it right there? Well, look to the left as I draw it to the right. There's your role reversal support. So I came in a little bit higher than support. Look at that. 4 trading days ago, we hit that perfectly. And this is not uncommon for this to happen, by the way. A lot of times after my targets hit, we see reversals from that point. Not because I'm moving the market. I'm certainly not. But I'm drawing that target where I think we're going to see a bounce or a support level. So that's exactly what happened. Now, the other thing is happening. We got an ABCD pattern. Here's A at the very top right here. I'll put an A. Then we have a pivot here on Monday. So I'll put the B there. And now we have a half signal. But I'm telling you, tomorrow we'll probably see a C, which would bring it to a lower D. Where would that lower D be? Right by a gap fill support level. You see? Now, when you learn about ABCD patterns, it might take you a little while to get used to what we're seeing here on the chart. But after a while, you just boom, within a split second, you see an ABCD there. You know exactly where we're going to point D. And it's not a guarantee, of course, but there's a high probability it will get down all the way to D. So if you're taking a short position on that, maybe because you bought the puts, you're in great shape right there. So you got Walmart. We got Procter & Gamble. Third one was
Coke was
Coke.
Now, please.
Now I just got to say, our members do have a put position in this one, which we are looking at a pullback on this one. Now I have a downside target already established for Coke at 75.50. And if you look down below, we've got an amazing pivot here on the CCI. You see that? Now, if you look off to the right, that little blue bubble, it says 102.855. As soon as that drops below 100, which is only a little bit more than 2 points below that, then a sell signal is triggered, and you're going to get more swing traders reacting to that signal as well. So all the candidates that you gave me, being that they are short, there's a lot of short interest in those. I could obviously see why. The technicals are backing up that idea of shorting these stocks for sure. So those are the 3 stocks.
Well, thanks for the added content. Well, listen, we can't go any further without talking about February 27th. So a couple things happened today, AJ. So Bank of America said that silver could magically rise back to $100 an ounce, really put their neck out there. And then they also said that gold could rise to $6,000 an ounce within 12 months. Now, also, the CME for over 2.5 hours today broke. You can explain a little bit more since you remember, but there was a period of time when people could not trade whatsoever. All day orders were canceled. And it gave a little bit of a flurry because we're going into February 27th. And the last time this happened, it also gave a big boost to silver. So with all that said, can you give everybody a little recap of what you believe is happening on February 27th and what could happen?
Okay. Now, as a former member of COMEX, I'm telling you right now, as a member for 10 years, don't believe anything, and I mean anything that you're reading about what happened today on the CME. Don't believe any of it. I think that's a big smokescreen. I think the big problem is COMEX is running out of silver. And in 2 days, we're going to find out if COMEX defaults or whether or not they magically came up with enough silver to deliver.
So what happens?
I think this is a smokescreen so that when something happens on Friday or maybe even tomorrow, they have something to more or less, I guess you could say, deflect any kind of responsibility that they have to deliver. I think there's a big deflection. You see this in politics all the time. If you have a politician that doesn't want to answer a question, what do? They answer your question with a question and then deflect it to another topic. That's what we're seeing in the CME right now. Okay. Now, with that said, we can even talk about gold here.
Right.
I can't give you guarantees, but I can almost guarantee you that we're going to see $6,000 an ounce gold. Almost guarantee, because if you've been watching me on the Lindell TV network, which for you ex viewers there, Lindell TV is probably broadcasting something right now. But if you look at what's been happening through Project Vault, Donald Trump is going to be raising the floor or the minimum price for gold and silver to protect the mining companies that are trying their darndest to get as much metal out of the ground as they possibly can. They're having a very tough time because demand is so high and they only have so many mines that they could mine from. You see? So that's number one. They're doing it to protect the mining companies, to raise the minimum price, the valuation. Part two, now I'm going out on a limb, and you viewers know I do that all the time. You're going to see either on or before, maybe even slightly after, you're going to see Donald Trump announcing big news with gold, silver, precious metals, and stablecoin. That's coming. It's on its way. Just be prepared for it. Don't be shocked. Now, here's what happens. Not how many ounces do we have in the vaults in Fort Knox? Like 262, what, million?
262 million, yes. 262 million.
262 million ounces of silver. What happens if it goes from what the current valuation from the last started in the 1960s was what?
$42.
$42, exactly. What's going to happen if they raise the minimum level of gold from $42 to $3,000? What happens? Our national debt goes away, folks. That's the big rabbit that I think Trump is going to pull out of his hat. In an instant, he's going to eliminate not all the debt, but a very big chunk of the debt, because the U.S. taxpayers own that gold, but it's valued way down below. So it's like you owning silver or gold, and you go to the bank and you say, "Oh, I need." You want collateral for this loan that you have for me? Here's my gold. Here's my silver. Use that as collateral. That's what they're going to be doing. And the best part about this, it'll happen in a blink of an eye, because Trump and the administration does not need congressional approval to do that. All they have to do is the Treasury just have to raise the bar, and instantly a big chunk of our national debt vanishes. What do you think?
Yeah, AJ, right now it's valued at $11 billion, and that's at $42 an ounce. So the math, I mean, holy cow.
I'm not good enough with the math. You are not. Put it this way: we're probably, if they raise it up, don't quote me on this, but we're probably going to get over 30, maybe $30 trillion eliminated from our debt based on the gold being used as collateral. That's a rough estimate, but you're going to see it immediately liquidate a lot of that debt, or get rid of that debt. And what's that going to do for the markets? I don't know yet. I don't know, because if they introduce the stable coin and now all of a sudden they're going to use this gold to back the stable coin, I don't know what that does to that equation, because they might do that because China and Russia already have digital currencies ready to go that are backed by the physical gold. So if we don't do that, no one's going to want to buy the dollar from us if they don't back it with some sort of precious metal behind it. So it's a very exciting time, folks. And if you're not in the market and you're just an innocent bystander at this point, you may be regretting the day you could have or should have gotten into the market. And that's what we're doing. We're holding people's hands to help them come with us and take this ride, but do it comfortably, without stress, and using tools like we look at here in these charts to be able to help you make those decisions. And I think we just set a new record for live views on this broadcast. Congratulations.
We are so grateful. So AJ, real quick, I want to circle back to the State of the Union. I want to tie it all back in, because they touched on AI and the power sources, and they're now mandating / giving permission to these large companies who are consumers like Amazon, Google, Meta, Microsoft, and Oracle to produce their own on top of OpenAI and whatnot. So if I've got a chart up here that shows the projected power demand. I mean, it's almost unfathomable, but we can't sustain it right now. And we all know that these deals have been signed, but it has not been delivered, that's for sure. So I have a question for you. Would you mind looking at DTCR, which is a digital infrastructure ETF? It's a way for people to play on these things. And then maybe a little bit on BTU, which is a coal play, and OKLO, which is a nuclear play, because that was all touched on last night by the president, and they'll all be crucial in us figuring out how to support this.
We're not going to have time with the other ticker symbols. We'll stick with DTCR because we're coming down to the wire. And I want to get ticker symbols from our audience here today. Obviously, you can see that this is an upward trend. Now, whether you're a flag-waving Democrat or Republican, it does not matter. It was important for everyone to listen to what the president was saying with regard to this power deal and what they're planning. Basically, they're allowing companies to build their own power plant so that they're not relying upon the grid to do that. Right? Number one, it's going to be a lot cheaper for them to do that. But the big bonus to citizens that live around these plants is that these power plants are able to feed into the communities that are surrounding these production plants. You understand? So this is building our power grid out without costing the U.S. taxpayers a single penny. So they're going to be able to get the benefit of the power without having to pay for the construction of the power plants. And the companies get the big deal because they're now getting the power based on production costs for them, for their own selves, you see. So that's a big deal. Now with this one, I'm not familiar with it as far as trading because it's only been around for a little while, for a couple of years, but I do like the pattern. I like that it's in an upward trend. I would expect this one to pull back a little bit right to this role reversal here, and then I would be a buyer of this one right around $24. I have to keep this on my watch list because around $24, if you get a bounce, that thing could that could easily go up 25%, excuse me, from there. And yeah, and they got a pretty efficient option market. They don't go out with leaps, but they got a very efficient option market. So I like that one. And yeah, that's, you got to follow where the money is going, right? Where are these companies, the AI companies especially, where are they going to be investing their money in the near future? Power, baby. That's where they're going to go. And so if you're putting your money in the direction of where they're putting their money, the odds are obviously in your favor with that. So we got 2 minutes to take some ticker symbols. Nod, I'll let you be the bad
Yeah,
guy.
let's follow the money. Well, our friend Nick, who is a longtime follower, he says AGQ, please. You talked about silver, but is that a play that interests you with everything that's going on?
Well, obviously, you can see that this has rallied and come right back down with the silver markets. That's a weekly chart. AGQ is absolutely one I would look at. I wouldn't be buying it right now because it looks like we got that red candle right at the moving average. However, if you get any kind of a pullback and it holds this support down here right around 120 to 125, here's another one where I would keep on my watch list and most likely be a buyer in this area using options only. I would not be trading the underlying because it's just too expensive. There's no need to spend that kind of money with that. So that's what I'd be looking at as a pullback right around to the 125, 130 area, and I'd be a buyer in that space there. What else you got?
All right, William is looking for BTG, please.
BTG. All right, William. Thank you for joining us. I really appreciate that. I'd be selling the I got to be polite here. I'd be selling the heck out of that because if you look at all this green, look at that. We have 2, 4, 6, 8 green candles in a row, and that's known as a hanging man. You know what? We'll put a target out on this one, Nod. Here's the role reversal here. So I'm going to do a pullback to this one from, and that's a cheap stock, but from 620, I think that's going right back down right around 580 rather. So from 620, I think that could easily pull back 40 cents, and then you might get a bounce. That doesn't look like much, but 40 cents on a $6 stock is a lot. So you got to protect yourself. If I were in that one, I'd be putting my stop somewhere below that level, or you could even put your stop way down here below 5. Because if the stock starts dropping back down below 5, the margin requirement is increased, and that puts pressure on the underlying stock. So be really careful. Maybe we'll look at that one next week. Downside target 583. All right, next one.
All right, next one. Melissa would love to see Corning, please. GLW. She says this feels like an interesting one. Is this something you would play?
Well, here's another one. You got to understand, Corning is in a lot of different spaces here. This one is way overbought. I mean, way overbought technically. And this is the widest price divergence we've had on the stock, I think, in the history of the stock. So I would be expecting a pullback. I can't put a downside target on that yet, although I have a couple of downside targets that Corning absolutely hated. It doesn't like my downside targets at all. But the reason I can't put a downside target is because the volume is still increasing. So with that said, with the volume increasing on the way up, even though it's overbought, it could still go a couple more dollars higher before the buyers run out of buying power. And so that's what we have for Corning. Talking about running out of buying power. We didn't run out of ticker symbols. We're running out of time on this broadcast. And again, I want to thank everyone for helping us set a brand new attendance record. Remember, next week, we do this every Wednesday, right at the market close. Next week, come on over to YouTube, hit that notification bell, and you'll get right in there right from the very beginning when we start the show. So thank you for joining. Thank you, Nod, for your Nod Live feed. And we'll talk to you next time, folks. Take care.